Right, let's welcome in our next guest. We have Amisha Vora, Group Joint MD of Prabhudas Lilladher, joining us from Mumbai. Amisha, thank you so much for being with us on NDTV Profit. The markets are seeing a little bit of profit taking today. But do you think the Nifty has formed a good base and we are headed higher from here on in the near term?
I think in the near term, markets will continue to exhibit this very indecisive behavior till it gets a little more time to A, consolidate, and B, watch some of the events globally and domestically as to how they are panning out. I think maybe next 2 months could be the time when markets will continue to be little puzzled on which directions to take. Particularly, of course, Fed move is important, and this December being year end, fresh flows could be missing. And beginning January, as we hear out and watch some of the key moves from Mr. Trump, and also the demonetization impact, how it has been really fading away, as we see some of those things, I think markets will then start taking direction.
Right, Amisha, then what kind of range do you expect the market to trade in the near term?
I think that 7,800, 7,750, around that could be, market could find a very good support. And on the upside, I think that 8,300 could be the near term, cap, most likely. That's what the range I think it could probably be in.
Right. Now, Amisha, you spoke of the Fed rate hike. Don't you think the market has already factored that in? And the fact that domestic flows have remained quite strong, even in the month of November, we really haven't seen a large amount of redemption pressure coming through. So, don't you think that on these triggers, the markets could find its feet? With the budget also coming up, soon enough there'll be a budget rally as well.
So, particularly Fed rate hike, this hike maybe markets is almost in consensus, and to a great extent that has been factored in. But I think their commentary on speed of next moves and frequency of next moves will be important, and that's what market may watch for. At the same time, if you see, there had been good amount of outflow from FIIs in equities and a bit in debt, but how it resumes, that will also have a telling impact on markets direction, and that's what also we yet to see that.
Right. Amisha, if crude oil prices rally quite a bit from here on, they're already close to $60 a barrel. If they steadily continue to rise higher, does that become a big risk for our markets? Because last time we saw crude oil see a rally, nearly all risk assets also sold off.
Yeah, particularly we were one of the biggest beneficiaries, being the commodity consumer and particularly oil consumer. It had positive impact not only on our budget, fiscal, and also on our current account deficit and inflation. So very rallying crude and sustaining at those levels would definitely be a factor to worry about, both in terms of economic impacts, but that could be probably in such benign inflation atmosphere can be passed on, but also in terms of the sentiment, because this will be a factor which will add to all these which were looking very, on a macro level, looking extremely decent and making India's story very, very lucrative.
Right. So which are the sectors that you like from here on?
I think that despite the crude rally, or despite the demonetization and its impact on consumption, which has slowed substantially, I would still probably construct the portfolio and keep the portfolio in and around domestic consumption only, largely. And some of these stocks within auto ancillary would continue to find favor, apart from the stocks within the NBFC or finance space. And also I would now start looking at and add in the construction infrastructure sector, some of the stocks particularly to do with be it road or railways, and also some of the very, bottoms up approach kind of mid caps within the FMCG or fast moving or otherwise durable markets.
Amisha, what about cyclicals, especially something like metals? That space has done very well. Even when the markets have corrected, they really haven't given up a lot of ground. Would you look to add to your portfolio any of the metal stocks?
So from trading perspective of 6 to 8 months, one can look at some of the stocks and but in a very medium term kind of a structured portfolio, I would not still go after those stocks much.
Right. So Amisha, while you're very positively inclined towards consumption, would you look for some value buys as well? Cyclicals, you need to time them very well. But do you think that you're seeing value in some of the defensives from the technology space? Or do you think there's room for more correction?
So technology space probably is, yes, I agree, is coming closer to where we find value because they are definitely free cash generators. They are also the ones they will continue to pose that between 10 and 12% plus kind of growth. And the valuations are also coming to a very interesting level. Yes, they would be in a mode of gradual accumulation or hold category from here on. There could be some headwinds which will continue, and apart from that, the fact that they will have a sentimental impact, the headwinds, but I think that a lot of banking sector started doing well post-Trump. He has a lot of emphasis on manufacturing sector. So over 2 to 3 years time frame, if one sees, then the consumption or the client sectors for these companies are likely to do better. So I'm not very bearish on this sector. I think definitely it's a very gradual accumulation mode stocks.
Amisha, as far as consumption is concerned, as you mentioned that you seem to be bullish, just wanted to understand, every time they go down, every time you see the valuations for consumption attractive, there is always this debate that India's consumption story, has it come to an end? Can it continue to grow? So that's just the fear that one has to overcome when they are buying these names now.
So I think that India consumption story cannot come to an end so soon, and because of the demography, because of the per capita usage, and because of the fact that the income levels will keep rising over medium term, I think domestic consumption will continue to do very well. And if at all there are these temporary hiccups which come for, right now we are seeing 2 quarters, it may last little longer because of whatever is the impact of demonetization and little less circulation. And even beyond that, GST adjustments might take away a bit of time and effort and energy and slow down consumption, but all this will be the period to look at it. And one of the sectors within the it's not pure domestic consumption but related to domestic demand is diagnostic sector, where we are very bullish. We think that the sector is in for a good growth for the next 5 to 10 years maybe, and on the top of it they are free cash generators, they are not very capex heavy. So some of the stocks within the sector, we have been liking that a lot, which have been recent listings.
Right. There are a lot of other businesses in the consumption pack which also, involve a lot of cash. So basically their average selling price is very, very low, and that's why the cash involvement is decently high. Would you wait for this result or probably April results to try and see the impact, or do you think most of them will actually shift to the digital platform?
No, I think digital platform will be a very slow and gradual shift. It can't be very overnight shift. That's what I believe. And I think that, of course, this results market does understand it will be impacted. But even probably next result could be impacted because some of the production cut and its impact on labor incomes, etc., are yet to be felt, because I think minimum 2 quarters impacts will continue. If not, sometime at retail level it will start improving, but then manufacturing level stock adjustments will happen. So results will remain impacted for 2 quarters, it so appears to me. And somewhere in the middle of the next quarter we will get good opportunity.
What do you make of, something like a real estate sector? Now, last time around we had such disruption back in 2008, 2009. You just saw the real estate sector, giving 80% negative returns from the highs. But this time around, there was not so much bullishness. They were not very aggressive in terms of debt. So actually, when prices come down and their volumes increase, their profitability could be much higher.
I don't think profitability will be higher, but I think that right now the need is the momentum in terms of movement in terms of actual transactions, which has come down a lot. So maybe with implementation of RERA, with reduction in interest rates, and maybe accompanied by a little reduction in prices, if the overall consumers in next 2 to 3 quarters come to feel that that is where the real estate prices have bottomed out and the transaction flow improves, that should be the key to them. I think everything else in terms of profitability, etc., will be 1.5 to 2 years down the line, but they basically need transactions, more quick churning and confidence of buyers back across.
Right. Thank you so much, Amisha, for taking out time for us. Always a pleasure talking to you.